In 2022, frozen food giant Tyson Foods saw a positive trend in its financial performance. While the revenue increased by 13.4%, indicating strong sales growth, the net income also showed improvement, with a 6.2% increase year over year. However, it's important to note that the stock price experienced a significant decline of around 39% since then. This is partially due to the price of meat going down significantly in 2022 and 2023, and the company reporting a surprise loss in Q1 2023. Today we'll take a 3-step approach to thoroughly evaluate the company and determine its fair value. Step 1. Margin of safety. In this step we'll look at Tyson Foods' key metrics and ratios to determine if we should be more or less cautious when determining a fair value. Here we'll delve into Tyson Foods' financial statements and assess critical metrics and ratios. In step 3, we will be using a combination of valuation methods such as discounted cash flow and discounted dividend to get an insight into the value of Tyson Foods' business. By using these methods, we can determine whether the stock is overvalued or undervalued in the current market on different metrics. In conclusion, by combining the findings from the 3 steps, we'll ultimately determine the fair value of Tyson Foods as an investment opportunity. To determine our final valuation, we'll be using a margin of safety. This margin of safety will be based on the financial ratios, the financial health, and the growth of the company. And we'll be using a standard margin of safety of 25% that can never go below 0%. The margin of safety can either increase or decrease based on the ratios that we're going to look at in just a moment. And the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in our scale, bright red will mean a 5% increase, orange will mean no change, light green will mean a 5% deduction, and bright green will mean a 10% deduction. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green will mean a 5% deduction from margin of safety. First metrics that we'll be using are the margin and EBIT growth. The EBIT has gone up over the years, going from just under $1.4 billion in 2013 to $4.4 billion in 2022. The average EBIT growth during this period is 16%, which is in the light green part of our scale, indicating a 5% deduction from margin of safety. The margin has gone up over the years, going from 4% in 2013 to just over 8% in 2022. Average margin growth during this period has been 10.5%, which is far beyond our bright green part of our scale, which is another 5% deduction from the margin of safety. The next 2 metrics that we'll be using are the dividend growth and the payout ratio. The dividends have gone up over the years, going from 40 cents a share in 2015 to $1.92 a share in 2023. The average dividend growth during this period is 23%, which is a 10% deduction for our margin of safety. This with a payout ratio that is sitting at a very solid 45%, which is no change in the margin of safety on this metric. And the final 2 ratios that we'll be using are the debt to EBITDA and return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it, and divide it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the company to pay off all of their debt. And for Tyson Foods, this is just over 1 year. In this case, a 130% debt to EBITDA ratio. And we like to see this ratio under 3 years, or a 300% debt to EBITDA ratio. In this case, it's even less than 150%, which awards them with a 5% deduction from a margin of safety. The return on invested capital for Tyson Foods is sitting at a relatively okay 5.4%, indicating that the management is quite effective at allocating capital, but not amazingly. This is no change in the margin of safety on this metric. Looking pretty good so far for Tyson Foods. Let's go look at the valuation models next to determine the intrinsic value of the company. The first valuation model that we'll be using is the discounted cash flow model. I've imported the free cash flow of Tyson Foods going from 2013 to 2022. The average growth rate in their free cash flow annually during this period has been almost 35%, and I'm projecting their future free cash flow to grow by 8% annually for the next 10 years. And with this percentage, we'll determine the future free cash flow for Tyson Foods and determine a terminal year of valuation using a perpetual growth rate of 3% and a discount rate of 8.5%. This gives us a sum of free cash flow of $20.2 billion, and to get to our equity value, we have to add the cash and equivalents and subtract the debt, giving us an equity value of just under $13 billion. And dividing this by the amount of shares outstanding, we get a discounted cash flow price per share of $45.49, which is a 19.27% downside from the current price. The second model that we'll be using is the dividend discount model. I've imported the dividend payouts of Tyson Foods going from 4 years ago to the current year. The average growth rate in the dividends during this period has been sitting at 6.42%, and I'm projecting all of their future dividends to grow by 5%. I will once again be using a discount rate of 8.5% in this valuation, giving us a dividend discount model price per share of $57.60, which gives them an upside of 2.22% out of this model. The next model that we'll be using is Graham's revised valuation formula. In this model we take a look at the earnings per share that Tyson Foods is generating, the growth rate estimate projected by Wall Street, and the current yield of AAA corporate bonds in relation to the average yield of AAA corporate bonds, always sitting at 4.4. And we go by the theory of Benjamin Graham that a PE of a company with no growth should never exceed 7. And looking at all of these metrics, we get a fair value of $58.25, which is a 3.38% upside out of this model. The fourth model that we'll be using is the multiple valuation. In this model, we take a look at similar companies, Tyson Foods, look at their stock price and their earnings per share. This way, we can determine the average PE multiple in the industry, which in this case is sitting at 11.73. All we have to do then to get our fair value is to multiply by the earnings per share that Tyson Foods is generating, which is $4.20 a share, giving us a fair value of $49.27, which is just over a 12.5% downside out of this model. And the last model that we'll be using is the mean reversion theory. In this model we go by the theory that a company will always trade above or below its mean, and the metrics that we use to determine this are the dividend yield and the PE ratio. In this case I've imported the dividend yield of the past 5 years, and on average it has been sitting at 2.12%, while the current yield is sitting at 3.67%, indicating that's undervalued on this metric. Doing the same with the PE ratio, the average PE ratio of the past 5 years has been sitting at 10.19, while the current PE ratio is sitting at 12.54. Indicating that it's overvalued on this metric. Out of this then we get a fair value of $71.59, which is just over a 27% upside from the current price. Let's go look at the final overview of a valuation next. Looking at a final overview, we've imported discounted cash flow, discounted dividend, Graham's valuation, the multiple valuation, and the mean reversion theory price per share, giving us an average of $56.55. Margin of safety we've determined earlier using a standard margin of safety of 25%, deducting it by 5% for the debt to EBITDA, EBIT growth and the margin growth, and deducting another 10% for the dividend growth, leaving us with no margin of safety at all, meaning that the fair value is the same as the average out of our models, which is $56.44, and with the current price of $56.35, it's trading very close to fair value with only an upside of 0.16%, indicating that's currently a hold. If you want to get access to all of the models I use in my videos and much more, you can check in the description for our Patreon link. And if there's any other companies that you would like to see me cover on this channel, please let me know in the comments. Thanks for watching.